We're half an hour away from the opens in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Annabelle Droulers with David Ingles.
Happy Friday morning. Let's get to your top stories today. Tech giants are feeling the fallout from China's economic slowdown. You have Baidu posting its biggest revenue drop in more than 2 years. And PDD warning of worsening profits after that earnings miss.
Well, Asian stocks, they're tracking the gains on Wall Street. Bitcoin as well, edging closer to $100,000 as that Trump-driven rally extends.
And the president-elect nominates Pam Bondi to lead the Justice Department after his first pick, Matt Gaetz, drops out. Meanwhile, the search for a Treasury Secretary goes on.
All right, a lot of green here to close out the week, and it's been sort of an interesting session because yesterday was really, of course, the reaction to what came through with the NVIDIA numbers. Always a high bar for that company to clear in its results. It didn't seem to do it quite just at the announce of the results, but still throughout the trading session on Wall Street overnight, investors sort of seemed to change their thinking around the stock and what the company had been signaling, for instance, in terms of the new product lineup, that focus on the Blackwell chip. They're saying that they still can ramp up. So you saw NVIDIA actually managing to close the day higher. And again, that led to positive sentiment across the board. That's really being reflected so far in the Asian session. You take a look at, for instance, those tech-heavy benchmarks, the likes of the Kospi, Taiwan, both of those moving higher. But Taiwan really the standout, up 1.6% straight out of the gates this morning. So that's really what has been sort of the broader dynamic. US futures here fairly steady, but it has also been that other story coming through markets, the shift back by some into some safe haven assets. Because if you change on, we actually saw Russia or Ukraine saying that Russia had used a new missile against it, a new type of missile. And again, that prompted that flight back into safety. So Brent crude, for instance, up as much as 2% yesterday. Today, you're still continuing to move a bit higher, and investors continuing to go back into gold. Just a reminder, of course, that Goldman Sachs commentary out saying it could hit $3,000 an ounce earlier this week. Dollar gauge fairly unchanged, but of course, very close watch what's happening with Bitcoin, because we are eyeing when are we going to get to $100,000 a token. Could it happen this weekend? Actually, when you take a look at weekend trading activity for cryptocurrencies, since they do trade 24 hours a day, you can see some outsized moves when the mainland or broader markets are shut. Let's change on, take a look at what's happening in China, because even when you have all that positivity coming through broadly in equities, it didn't really translate yesterday. Golden Dragon Index down 1% overnight, and you are just seeing futures here a little steady day ahead of the open.
Yeah, and to Belle's point, a 1% drop in the Golden Dragon Index. We thought for a moment, which was really more last week's story, that onshore stocks did manage, past tense, to snap out of that extremely tight range to the upside. But we knew this was coming, this again, to channel M&M for a second time this week, to snap back to reality when you look at these earnings coming through. We'll talk about Baidu and PDD in a moment. There's an index review. Do we get more than 82 stocks after today's review of the Hang Seng Index? There is a longer-term objective of taking that to about 100. Does that happen today, or do we have to wait for further future reviews? More on that in a moment. We have also a bond auction today out of China, plus perhaps I would say the biggest potential catalyst here would be this joint briefing taking place in the next hour. We have the Commerce Ministry, you have the Customs Bureau, you have the Ministry of Finance, among officials there doing this joint briefing at the top of the next hour. Stay tuned for that. In the meantime, of course, let's have a look at these earnings stories coming through, Bill.
Yeah, it's really interesting because we've had these results coming out from PDD, Baidu, US-listed shares. We saw those closing to the downside. I mean, you've got that there. A huge drop for PDD, and I want to get more on this now, bring in our China correspondent, Min Lo. What I find fascinating about this is that PDD is sort of the company in the e-commerce space that kicked off the aggressive price war amongst the major retailers, and now it actually seems to be hurting itself at the same time.
Yeah, and it keeps coming from the company guidance, because we saw that it's like deja vu in August as well. The company saying that warning about slowing growth in sales, that said the single day drop by 29%. And this time, once again, at the earnings call, the CEO or the company executive were warning that we could see the profit trending down again. And the company also acknowledged that its team of staff is lacking in expertise and experience compared to some of its rivals. So that sent the stocks plunging again by 10%. And we know, yes, it is at one point one of the most downloaded apps in the US, but that also puts it in an extremely vulnerable position in terms of the potential Trump tariffs that could decimate the sort of trade that Temu really relies on. Plus, that very aggressive pricing strategy is attracting pushback from the likes of the EU, which has launched an investigation into Temu, accusing them of not cracking down on the sale of illegal products. So our Bloomberg intelligence team is saying that we could see a 10% cut in consensus forecast when it comes to its earnings through 2025.
Yeah, let's talk about Baidu now. So we had a slight downgrade from Citi on the price target. I think shares should be opening up or should be set to open up lower. What can you tell us about Baidu? How bad were these numbers?
Yeah, so the revenue was down by 3%, but that is in line with expectations. But it's the earnings that came in 5% below consensus. And again, as Annabelle, you have said many times, it is the struggle to monetize those AI tools. It is a market leader when it comes to the Ernie AI chatbot, and it's handling 1.5 billion queries every day. But it is losing market traction to competitors like ByteDance's Douban, which is the more popular app now. And plus, its core business, the search engine as well, is facing competition from the likes of Xiaohongshu and ByteDance, Douyin, for example. These are video apps, but they also can in some way function as a search engine as well, generating user-generated results. And plus, the big drag is the advertising revenue, down 6%, because Baidu counts among its clients the real estate sector, the automotive sector, and it's really affected by this broader economic downturn.
Yeah, it's certainly a stock that's facing a number of challenges. But let's also talk about something that's grabbing a lot of people's attention, and that's what we're hearing from China's richest man. He's actually squared off against PDD and ByteDance in particular.
Yeah, this one is interesting. So it's Zhong Shanshan, the founder of Nongfu Shanquan, which is a water and beverage company. So he is lashing out at PDD, saying that its aggressive pricing strategy is very disruptive and harmful to all these other traditional Chinese brands. And has also hit out at Douyin as well for allowing these online trolls to target him in the aftermath of a death of a rival, the founder of Wahaha, also another beverage company. He's saying that Douyin had, its company's algorithm had really played up these negative criticisms, and that's because at the time, after the death of Wahaha's founder, there had been a lot of unflattering comments, just comparing everything from the bottle packaging to the water quality to his business tactics, for example. So we know this is a guy, he lost something like 20 billion in market cap as of August, year to date so far, but he's regained the top richest man spot in China. But this is a guy who made his fortunes in traditional manufacturing, so he has always somewhat scorned the new generation of internet businessmen.
Very old school, as they say.
He said he will never sell anything by live streaming.
Oh.
Yeah.
Okay. Well, let's wait for next year. Now we'll see. Min Min, thank you so much. Min Min Lo, our China correspondent. A fantastic story here. We have a full write-up on that on your Bloomberg terminal and today on why he's cross. Okay. President-elect Donald Trump says he's nominating former Florida Attorney General Pam Bondi to run the U.S. Justice Department. That's after his first pick, Matt Gaetz, withdrew from consideration. John Harney, our Bloomberg editor, is with us right now to talk us through this. John, well, first, happy Friday from the Asia Pacific. Thank you so much for joining us. Take us through this new pick.
Well, after the chaos of the Gaetz nomination, obviously they're hoping for something a little smoother. Pam Bondi, as you say, was the Attorney General of Florida, and has a long association with Donald Trump. He's been a strong supporter. When she was Attorney General, she joined with other Republican attorneys generals around the country to try to undo Obamacare. And she defended Trump during his first impeachment in 2019. And during the 2020 election, interestingly, she played Kamala Harris in the preparations for then Vice President Mike Pence. So she's someone who Trump can trust, and she has a record as a law enforcement officer, which will be important to the senators who will be taking up her confirmation.
It's quite incredible, John, that Trump has been able to nominate two US attorney generals in the space where he hasn't managed to actually come up or publish that name for the Treasury Secretary. So what's the latest on that?
Well, that's the guessing game that people in Washington to Wall Street to Silicon Valley want to know. He has spoken to several candidates, supporters, people who are insiders, people who are maybe not so much insiders, and is really taking his time on this one. There were various people who were rooted about in the early days after the election, and they may have. They may be less likely now, but maybe not. We really don't know. It's all at this point up to the man in Mar-a-Lago.
Yeah. Okay. Let's put that on a T-shirt. John, not that there is a hard deadline to make this decision, but how much time does President-elect Trump have to nominate his Treasury Secretary?
Well, different administrations when they're preparing to become administrations, go about this in different ways. In his first, after he was first elected, it was, he was very new to politics, new to government, and so it was kind of haphazard. This time, with Susie Wiles and others, running the campaign, they're hoping it'll be a little more straightforward. To answer your question, he has time still. I mean, it's Thanksgiving's next week. The country's going to be concerned about will be focused on the holiday. So if he did it in early December, that wouldn't be anything untoward. But markets obviously, and government officials around the world would like to know as soon as possible.
Yes, certainly. There's a lot of people that are looking for the answer on this one. But that was our Bloomberg editor, John Harney, there. And we, of course, continue to keep an eye on the latest geopolitical developments as well. The US is sanctioning Russia's Gazprom bank in a bid to further squeeze natural gas exports. The move increases the risk of a cut-off of some of the remaining Russian gas flows to a handful of Central European nations that still use the bank to make payments. Gazprom Bank was the last major Russian financial institution exempt from penalties. Russia has confirmed it used an experimental intermediate-range ballistic missile against a Ukrainian city. President Vladimir Putin says the launch was in retaliation for Kyiv's use this week of US and British-made missiles to attack Russian territory. Ukrainian President Volodymyr Zelensky calls it a serious escalation in the war.
Okay, going into the open today, we're looking at the fix very closely after, as you can see on your screens, this is the spread between the actual fix and the estimates. And recently, the last, 10 days or so, the PBOC has really been leaning into the weakness in the currency, unsurprisingly, given the dollar is on this 8-week rally. More on that in a moment, plus the approach to the final session of the week in Shanghai, in Shenzhen, and here in Hong Kong. 16 good minutes away. This is the China Show.
Welcome back to the China Show. We just had the yuan fix coming out, a stronger than expected reading for yet another day. We have really seen that the PBOC pushing back on the yuan slide, which has been surprising, of course. I mean, yes, you're against that backdrop of dollar strength, but still we have seen really question marks over how the PBOC will react to the risk of tariffs coming in as well next year.
Number 8. Yeah, day number 8, this is coming in much stronger than the estimates, 555 pips. In fact, that spread is now the widest, if you go back to the last bout when they had to lean into the currency weakness, which was back in about, I would say about August 5 of this year. That's, of course, when the carry trade unwind melted markets just about across, for 2 days only.
Yes.
Yeah, okay.
Yep. Okay. All right. We'll leave that there. Of course, counting down to the open. Baidu, one of the stocks we're going to be really watching in particular, given we had those weakness in the earnings overnight. But let's bring in Taosha Wang here, a portfolio manager at Fidelity. And Taosha, let's start off because I think Chinese equities continue to disappoint, basically, in investors. Do you see any sort of near-term upside, given we're sort of in the rearview mirror of earnings, those disappointed, we've got that tariff risk, and you've still got the US exceptionalism story as well to contend with?
Yeah, certainly. I think a lot of good things on the policy side has happened in China, and now we're waiting to see the policy initiatives translating to positive earnings and business confidence going forward. So that is still something we're watching. We're interested in investing more from its idiosyncratic, so identifying the good companies that are investable in this space. On the other hand, the U.S. exceptionalism remains a fairly strong backdrop in this market condition. We see that in top-down data. We see that in bottom-up earnings as well. We like to think that the risks to the current assessment of U.S. growth is biased to the upside. And AI and structural reform are probably the two reasons driving potential, upside risk to U.S. growth exceptionalism.
Well, sorry, just to clarify, you said structural reform, but this is in the U.S. context. We don't, no one ever says that.
Yeah, people talk about structural reform. We often frame it in the EM context, but it's not. It doesn't have to happen in EM. Structural reform can happen in DM, developed market, as well as emerging market. It's just that typically, the bar may be a little bit higher to do this kind of stuff in the developed market. And I think after the U.S. election, the incoming new government probably has a stronger mandate to push through what they call efficiency measures. But the way I think about structural reform, I think about it, if you think about, mathematically, you think about government efficiency as expenditure over GDP. I like to think that, the structural reform work both in the numerator as well as the denominator, in the sense that, it will remove regulatory red tapes, boost, animal spirit, etc. So that boosts the denominator. But also at the same time, potentially some efficiency measures, cutting a little bit of cost here and there. So it works in both ways. I don't necessarily agree with, the rhetoric that, it's all about cost cutting.
Yeah. A fairly obvious question. What does it have to do with the stock market and U.S. valuations? Just to connect those two things.
Well, certainly when you have the denominator becoming bigger, GDP growing bigger, that's a growth booster as well. When you have expenditures being deployed in a more sensible manner, then certainly boost the stock market as well. That obviously ties to the other factor for the U.S. growth surprise upside, which is the AI side of things, continue to be a strong growth driver, although we do expect it to be a little bit more cyclical.
Talk to us more about that. So you're seeing AI as a cyclical trend?
Well, we're saying that it's a structural thing. It's alive and well. It's here to stay, but it will behave in a more cyclical manner. In a more recent the earnings that we have seen from these companies, we see that they continue to be very strong in terms of the absolute numbers, but the beats, meaning the differences between what they report and what the market were expecting them to report, is getting narrower and narrower. So, and as a result, some of the price actions following the earnings are fairly choppy. So I think AI is certainly still, this big trend that has a very long runway. But there are three characteristics that makes it cyclical. Number one is that it's still in investment stage. And it's different to spending today to keep the lights on versus spending to hopefully earn it back in a few years down the road. And secondly is that a lot of the investment is going to hardware and semiconductor, which have their own natural, product inventory cycle. So those are cyclical stuff to start with. And thirdly, a lot of AI innovation is driven by startups. And startups needs funding and access to, especially venture funding, which is a higher risk kind of investment, is dependent on market as well as overall economic condition. So these are the three reasons that I suppose make AI a little bit more cyclical than the simple growth stories that some people just think about.
Yeah, it's not
a straight line.
It's not just a pure growth story. Yeah. I want to ask you about your contrarian call on home builders. I think we have that index. Can we fire that, guys, if we have it? Please, what's the call behind being long these home builders? If rates stay high as well, what happens with that too? Because the U.S. has done very well, right?
Yeah. The U.S. home builder trade is tactically a long duration trade. It's intuitive in the sense that rates come down, as exactly as you mentioned. Housing prices go up, people buy more homes because mortgage is more affordable. But thematically, a home builder is actually a trade to long the American wealth effect. Jobs market is doing well. People are getting rich from the stock market. Mortgage, home price is still rising. And then there's also the structural reasons that number one, mortgages are fixed, 30-year setup in the U.S. And more importantly, there has accumulated significant underbuilt in the U.S. housing market. So the market has been in short supply for some time. So it's a bit of a contrarian trade in the sense that tactically it's linked to the rates direction, but thematically it is something that captures the long-term wealth effect.
Just very quickly, I want to ask, we've had a viewer comment saying that they've heard a lot about how deregulation, government efficiency is likely to help the stock market. But could you give us a concrete example on how that's expected to happen?
I think the discussions that's happening about how to effectively regulate AI is one thing that's that can unleash a lot of creativity in that space, because it's still such a Wild West kind of space that people need to have some kind of confidence as to how comfortable, what kind of guardrails we need to stay within. And certainly there needs to be guardrails. How realistic, how business savvy, or how responsible are these guardrails? Certainly will define.
Taosha, have a great weekend. Thank you so much.
Thank you so much.
Long U.S. there, suffice to say. Taosha Wang, portfolio manager at Fidelity. We're looking at a flat open in your pre-markets. We're looking at Baidu coming up next. Big drop in your pre-markets. Plenty more ahead. This is Bloomberg. Happy Friday. Welcome back. We're looking at shares of Baidu in the early goings this Friday. As you can see, we're selling off. We're set to open below $80, which puts us extremely near two-year lows here on the share price. Unsurprisingly, given, well, as expected, though, earnings coming in on the softer side, and this really tracks the fall and the drop in the U.S. session overnight.
Yeah, it's interesting. When you take a look at futures, it's actually not translating so much across, because we've still got the Hang Seng at least looking to open flat, but it'll be that question, do the earnings from Baidu, PDD also come across into that and drag it into the red when we get underway? Analyst actions as well to note, we've actually seen Jefferies pushing through a wave of casino upgrades. You can see here on your screen, we had the Macau visitor arrivals for the latest month moving higher. PDD, of course, one to note as well, because we actually had a price cut coming through from Citi earlier. But that's it. Analyst actions. Open is next, and this is Bloomberg. Welcome back. You're watching the China Show, and we're counting down to the open of markets. I think if you were to have sort of a phrase that would encapsulate the China earnings, what would you say? I would say disappointment overall. We've seen we've seen most of them undershooting expectations, and that's maybe going to end up being the trading theme today. Futures are kind of flat right now, but PDD, Baidu, what am I saying? PDD and Baidu overnight really disappointed.
Yeah, and even include there some of the car makers, right? Which reminded us really of the themes that will remain. It's going to take a while to turn this economy and earnings around. It's almost like, I always like dental analogies. Like, you know how your dentist always makes you commit to something 6 months down the road because they know that you'll need to get cleaning done. It's amazing though how they know you'll be free 6 months from today.
Flesh this out a little more, Dave.
Well, they're always after my wisdom teeth every time. It's so consistent. It's so consistent. It's, find another way to make your money. Leave my wisdom teeth alone.
Oh, gosh.
There we go. Find someone else's wisdom teeth. Anyway, the open is lower today, and apologies, we digress again. There is an important, well, we'll see, but there's a joint briefing taking place at the top of the next hour. If my memory serves me correct, we have the Commerce Ministry, the Customs Bureau, the Ministry of Finance, among other ministries that are set to talk us through, I think, foreign trade That's the broad guidance as far as this is concerned. So watch out for that. Let's have a look at Hong Kong, please, if we can. So top of the agenda today, perhaps right after the close, will be this. The index compiler will be talking to us about some changes, of course, to the index. We'll see what that. We'll get a preview of that in a moment, of course. Some of the big tech stocks, bottom of your screens, were opening higher, at least for most. Tencent and Alibaba going the opposite way. Meituan to the downside, 0.7 to 1%. Flip the boards, please. So Baidu out with earnings, drop of about 6% overnight. We're dropping, there we go, 10%, give or take, in the opening minutes at 76.40. This should be now that should be the lowest in about 2 years. If not, that takes us below the trough on COVID zero. We'll double check that for you. Kingsoft is paring back some of the massive gains we've seen in that stock of late, and of course we're looking at some of the crypto-related stocks on the back of Bitcoin and maybe knocking on the door of 100,000 on price, 2 trillion in market cap. And very quickly, Bell talked about this earlier on, some of the casinos. We had a 24% month-on-month increase in visitors to Macau, and then you have Jefferies coming out with some changes to the ratings, accumulated buy on most, with the exception of, I think, SJM, which is now a hold. I think we have that. Is that coming up on your screens? If not, we'll get them to you later on. It doesn't seem like we have it. Anyway, you can trust what we say. There we go.
We'll move it on because we're going to talk about Baidu in particular. You can see that big drop there. And actually, Dave, yes, it is a 2-year low for the stock.
Okay.
Lowest now since November 3, 2022. Let's get more on that, bringing Catherine Nye, who leads our Asia stocks coverage in Hong Kong. And I mean, yeah, safe to say that there's a lot of headwinds facing this company. It's really committing on doubling down on its AI spending and its AI program, but it hasn't really been able to monetize it yet either, it seems.
Absolutely. I think what's happening with Baidu and, of course, PDD overnight also had a big drop. I think that the similarity here is that just the economy is not great, right? I mean, these are the companies that had been leaders and are saying, hey, guys, we really are suffering here. There's just no turnaround. There's no pickup. The consumption economy is just really, really weak. Even the ones that were strong are now saying we just can't get out of this hole.
Yeah, let's talk about, so we talked about Baidu, so I want to set that aside for now. I mean, we could see that drop by about, I think it briefly dropped 10%. Anyway, the other big story I want to ask you about is this index review on Hang Seng Index. I mean, we've been stuck at 82 stocks for, I think, the past 2 or 3 reviews. I mean, do we get more today? What changes should we expect?
Right. I mean, I think if I was a betting person, if I was to bet my wisdom teeth on the line here, maybe it would. Yes. I've already lost mine, but I would probably say we'd see some additions here. It's been sort of, you say, stagnant flat for the last couple of quarters. I mean, I think the HSI really needs some sort of like rejig. I mean, this is a benchmark that just has been doing pretty, weak. It's been weak in the last couple of weeks after its sort of high post-stimulus in September, October. It's been falling. I think it's down 15, 16%. We're eyeing a bear market here. It really needs some sort of revival, something to differentiate it. There are strong contenders here. There are sectors that it's a little bit underweight and probably could pick up given just the performance of the Hong Kong stock market this year.
What are the contenders? Just give us some more details on that one, what you're expecting.
Right. So I think that on the top of everyone's list is Kuaishou. That has been a pick for many, many quarters. We'll see if people will finally get the right, the tea leaves are finally reading right here. The other one is PopMart, really hot stock this year. At one point, it was the top performer on MSCI China. I think it's fallen to number 2. But something really interesting about sort of the blind box phenomenon. Thank you, Labubu. I have a colleague that loves it. These little tiny dolls that feel good, and everyone needs to get one. They're really hot. Think of it's the Beanie Baby of the day, I think, if I could say that. But so some consumer stocks that have sort of weathered the overall sort of weakness in the consumer sector, and I think pharma and healthcare is a really interesting space, especially since China has been really pushing on. This sector has been offering a lot of stimulus in terms of gene therapies, in terms of different kinds of immunizations and things. So this is a sector that's really becoming a hotspot.
Yeah, really policy-backed healthcare. Catherine, thank you so much. Well, we'll have to wait, of course, for that to come out later today. Qianhai there, of course. Right, in some other corporate stories, my camera's this. Okay, we're tracking today. Chinese online brokerage Futu is reducing its headcount by about 5%. The Tencent-backed company says it's recently made adjustments to its org structure, including new roles and also cutting existing positions. Futu has added staff over the past few years, even after Chinese authorities lashed out at online brokers back in 2021. Now, Alibaba has named a veteran executive to oversee its entire online e-commerce operation in a major overhaul of the struggling business. Jiang Fan will take over a new department that groups Taobao and Tmall in China, and of course you have in Southeast Asia, Lazada. Asia's e-commerce, Alibaba's e-commerce operation grew about just 1% last quarter amid competition from the likes, and we talked about this, from PDD and also ByteDance. Now, Uber is said to be planning to invest in the U.S. IPO of Chinese autonomous driving firm Pony AI. Sources say it's seeking to buy more than $10 million of shares as it considers using Pony AI tech in a partnership outside the U.S. Documents obtained by Bloomberg show that Pony AI's share offering could raise as much as $260 million.
Apple is said to be developing a more conversational version of its Siri digital assistant. Sources say it's looking to catch up with OpenAI's ChatGPT and other voice services. We're now told the new Siri will use more advanced large language models to allow for back and forth conversations. And really what was the news story that's continuing to reverberate from yesterday is Adani Group shares, because they've lost nearly $27 billion in market value after an unprecedented bribery charge from US prosecutors, which has wiped about $15 billion from founder Gautam Adani's wealth. Let's get more with Bloomberg's Avril Hong, who has been tracking the developments for us. And Avril, let's just talk about, because when you pour through that long document that sort of spells out the allegations against Gautam Adani, it does actually reference a Bloomberg News report. So how is that caught up in it?
Yeah, we've been taking a closer look at those U.S. charges. And to be clear, the Adani Group has denied the accusations. They've also threatened legal action. But some of the questions that have been swirling is why U.S. prosecutors have gotten involved if this alleged bribery scheme involved promised payments to Indian government officials. And our colleagues have been taking a closer look at these charges. And in it, there are comments that the Adani Group made in a Bloomberg News report from March this year, in which they say they had no awareness. They were not aware of any investigations into their chairman. Now, U.S. prosecutors say this is a false statement because Sagar Adani, this is, of course, the nephew of founder Gautam Adani, had received subpoenas as well as search warrants earlier in the year. So just the idea that they misled U.S. investors as well as financial institutions.
Avril, might this possibly bleed into broader cross-country relations, for example? How might this affect relations between the U.S. and India?
Yeah, it's already a very delicate relationship between the U.S. and India, and the concerns are that this latest incident could just complicate things further. As you both know, the Prime Minister, Narendra Modi, has very close ties with the Adani founder, and it's seen that he's likely to kind of resist or push back against any attempt at extradition. And this kind of sets the stage for political controversy and a tussle over extradition. I mean, you think about how this prosecution could actually prolong, right? It could take months, years even, which means that it's likely to also land on Trump's Justice Department, and some are already pointing out that it could be up to Trump, if he so chooses, to kind of cut a deal, make this whole matter go away, so to speak. And why this is part of the equation is because Trump and the people in his orbit, I think, see India and, more importantly, the Adani Group as a sort of counter to China's hegemony. So this is how it could all be a factor in relations between the two sides.
Right, so the indictment might not end up becoming sort of an existential threat to Adani, but it is something that could perhaps constrain it on a global level?
Sure. Yeah, so I think the key concern is that this would kind of curtail its access to fresh capital, whether investment banks will want to continue lending to it. And as you say, it's not seen as an existential threat. But this is also a group that has a wide array of interests. You think about ports, energy, weapons even from Vietnam to Israel. And it's also seen as India's closest proxy of sorts, right, to China's Belt and Road Initiative. So the concern here is that this could curtail access to capital at a time when there's already challenges that it's facing in some of the projects in Sri Lanka, Kenya, Bangladesh. So in a way, this could, tie its hands when it comes to the group's global ambitions.
Avril, thank you so much for getting us up to speed. Avril Hong there in Singapore for us. And by the way, for our viewers, you can read more about this indictment and what it could actually mean, to Avril's point there, for broader relations between the two. That's the topic for today's Big Take. It's available to subscribers on the terminal online at Bloomberg.com. More ahead here. Happy Friday, by the way. This is The China Show.
Season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell.
Earnings from Caesars crossing the Bloomberg terminal.
Mondele is reporting
Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate when your comps get tougher. How much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
Welcome back. You're watching The China Show. Let's dig into this big story that I think broke yesterday, and according at least to reporting, that Starbucks is said to be considering and looking at options for its Chinese assets, its operations there, including maybe the possibility of selling a stake in the business. Now, sources say the firm is speaking with advisors about these plans in China and those growth options there. Let's bring in Shu Li Ren, our Bloomberg opinion columnist, here with us. And, Shu Li, I think we've had a conversation months ago about the Luckin model and how that's worked, and this is just an example maybe of the challenges that Starbucks and others might be running into right now in this Chinese market.
Yes, absolutely. The difference between Starbucks and the battle actually between Starbucks and Luckin is basically the difference between using coffee as an expression of individualism, which Starbucks is doing, versus a streamlined supply chain, which Luckin is doing. The problem with Starbucks in China is that, Starbucks offers too many options, right? Like the syrup, the toppings, how much coffee, how many espresso shots you want in your Frappuccino. But Chinese coffee drinkers are not that sophisticated yet, and they don't really appreciate the variation and differentiation. And if they really want to express themselves individually, they go for the milk tea chains. I mean, China has so many milk tea, Chachi, this and that, right? So like Starbucks is kind of stuck in the middle. Like its flagship offering is not being appreciated by Chinese, and on the other hand, it's way more expensive than Luckin or Luckin's new competitor, Coty Coffee.
Okay, let's assume then that Starbucks does decide to take on something more drastic with the operations. How might that look, the Starbucks operations in China?
Perhaps it can sell to a private equity firm,
right.
And that that has been the option, right? And that private equity firm could in turn adopt a so-called franchise model, and that's how the Chinese coffee chains and the milk tea makers are growing. They basically say, okay, all the young people, they don't have jobs, let me franchise a store to you and you run it. And that perhaps will do a little bit better. There could be strategic buyouts, but I think it would be hard.
Okay.
What's sort of the perception of Starbucks in China today? Because you've covered as well just how many startups we've seen. It's not just Luckin in this space. It's becoming a very crowded market. Do you think that the new CEO of Starbucks also has sort of that level of experience and know-how of the Chinese market as well as Brian Niccol, who just took over the leadership post a few months back?
Brian Niccol is very well respected, but he doesn't really have any international experience. So I don't know how whether he sees the consumer preferences between Chinese and Americans. But I think Chinese consumers, especially, like people in higher tier cities, like young, trendy, hippie people, they do appreciate Starbucks because Starbucks does allow you to hang out all day just over one drink, right? But mostly people are kind of busy. If they want to have a quick caffeinated shot, they will go to Luckin, and it's much cheaper, 990 yuan versus Starbucks, I don't know, 40 yuan. And then some young people, they actually prefer milk tea. They don't want to be so caffeinated all the time. So it could be hard for Starbucks.
Well, it's an interesting time because I think if you're saying, people in China prefer sort of a drink on the go, and Brian Nichol in the US is saying he wants to double down on that in-store experience, it'll be certainly one to watch how it plays out. But that was our Bloomberg opinion columnist there, Shirley Wren. And speaking of drinks, actually, Dave.
Yeah, well, it's Friday, so why not?
Why not?
This time in the next hour, Grant Ashton will be joining us. You might know, of course, the Wine Club 67 Pall Mall will be joining us at those times, so stay tuned for that. Any questions, of course, for him, do send it to our way. And yeah, we'll see which direction this conversation goes.
Yes, that's right. But let's get back to something more serious in the meantime, and that, of course, is this tariff risk, really, that's on the horizon. But the Citadel founder, Ken Griffin, says he's wary of the long-term impact of those duties, which is a key part of President-elect Donald Trump's economic agenda. Speaking at the Economic Club of New York, he explained why tariffs may do more harm than good.
I am gravely concerned that the rise of tariffs puts us on a slippery slope towards cronyism capital. So when you implement tariffs for the American companies that produce goods in America, there's unquestionably a short-term benefit. You've just taken your competitors and severely disadvantaged them. The challenge with this, and we know this from the history of economics, those same companies that enjoy that momentary sugar rush of having their competitors removed from the battlefield soon become complacent, soon take for granted their newfound economic superiority, and frankly, they become less competitive on both the world stage and less competitive at meeting the needs of the American consumer. And then, of course, once you're in this world where companies know that their very existence is because of tariffs, in other words, if the tariffs came down, they wouldn't be able to compete, they wouldn't be able to thrive. Now you're going to find the halls of Washington really filled with the special interest groups and the lobbyists as people look for continued higher and higher tariffs to keep away foreign competition and to protect inefficient American businesses that fail to meet the needs of the American consumer.
Are you concerned here that some companies, some industries will be benefiting at the expense of others, even in this country?
Well, of course that's true, right? Those companies that bring in goods from around the world will be disadvantaged out of the gate. Those companies with a very large domestic production base will be advantaged out of the gate. I'm not so worried about I should be more worried about it, to be blunt. I haven't given much thought to sort of the internal equity as between these parties in the United States. I'm much more concerned that this is the beginning of a slippery slope towards economic, both irrelevance and going back to the earliest point, a decline in productivity, a decline in the very important need that we have to increase American productivity.
There we go. That was Shonali, of course, our colleague Shonali Basak with Citadel CEO Ken Griffin. Okay, plenty more ahead here on the show. We'll unwrap what's taking place in these markets, plus this joint briefing taking place at the top of the next hour. Plenty more ahead. This is Bloomberg.
Well, 23 minutes into the session for trading this morning, and there's really one, well, I'm not going to say one because we've got a handful of stocks to check here, but
the first
a notable one
is
Baidu, because we're seeing that drop here. It's down at the lowest we've seen in about 2 years for the stock, and the headline is that the revenue has disappointed. So Baidu as a business, it's investing a lot into its AI rollout. It's got its own Ernie bot. It's a very intense AI tool marketscape in China. It's actually been edged out from the #1 position. It's still doubling down on that drive. At the same time, you can cannibalize your own internal or your search business, which is what Baidu is known for. And that is overall representing a pretty significant headwind for the company.
Yeah. Buy to the bulls, as they say. 77 takes you back to levels of October of 2022. As well as far as that is concerned. The casinos, and Belle, you were talking about this too, right? So we're done with the reporting season. We had the visitor arrivals numbers from Macau pick up 24% month on month. And I think, was it Jefferies?
Yeah.
Yeah. They've come out with new ratings on these, some of these casino stocks as well. So I think Sands, Wynn, and Galaxy have been upgraded to accumulator buy. SGM, I think, is still a hold there for the company. In any case, we're seeing some modest gains there across some of the casino names going into the weekend.
Well, I guess as well, you've had that Golden Week holiday period, and you really want to know, is that stimulus starting to prop up consumer sentiment? And that's a positive figure that we're getting for those Macau casinos. Broadly, though, we're kind of looking pretty range-bound ahead of, or rather just a bit into the session here. The CSI 300 just fractionally under pressure, and also some of the guests we've got coming up in the next hour talking EVs with HSBC in a few minutes from now. Welcome back to the China Show, taking a look at a live shot of Hong Kong and also how the Hang Seng's faring so far. We've got 36 moving up, 44 moving down, and then also a couple unchanged. But that's really taking on new meaning for me actually today, Dave, because that's 82 in total that we're looking at. Maybe we could actually see the gauge being expanded if we get those index inclusions later today with the review.
I think it was back in 2021 when the compiler had this longer-term objective of having an index with 100 stocks, right? So they went up to 82. They've been stuck there for about, I think, the last 3 reviews. So to your point, we might actually get more constituents going into today. It's probably also easier for us when we do the math on up, down, and unchanged. You know, when we're working with a baseline of 100 and 82.
Yeah, absolutely.
Right?
If you want just thoughts and prayers to us.
Yes, come on. Give us a break here. The other big story we're tracking to, and we'll talk more about the Japanese markets in a moment, what this latest core CPI print might mean for the BOJ is, and that just disappeared. Oh, it's reappeared. There we go. So dollar-yen 154.42. We're coming off, 8 straight weeks. Well, we are on an 8th week of gains here as far as the U.S. dollar is concerned. The 10-year yield is down a little bit, although at these levels, it's practically at the highest level, if flirting with the highest level, going back to about 2010, 2011. And, of course, one of the rates play there on the BOJ is really the banks, and as you can see, that is up 0.9% in the going today. Right, let's have a look at Asia ex-Japan, please. Asia ex-China, rather, to be more precise. And make no doubt, right, we're going into the weekend here with still a lot of event risk, but markets and equities are bid. 0.6% to the upside. Japan is up. Korea is up. ASX is up, as with Taiwan, to 1.4%. I guess in many ways reflecting the tailwind which came through out of the U.S. markets overnight.
Oh, it's the NVIDIA story.
Yeah.
And I guess that's why you're seeing Taiwan sort of leading the benchmark today.
I mean, we were speaking with Taosha Wang earlier from Fidelity, right? And she thinks that the earnings that just finished from NVIDIA are a reminder that it's still a structural play. It's also a cyclical play in AI. So they're actually long U.S. equity markets because of that U.S. exceptionalism. And this additional concept now of structural reforms because of this new White House that's coming in with a broader mandate that they might be able to unlock more value in the U.S. markets more than already assumed. So that takes us into where we're ending the week, right? This dollar that keeps on rallying 8 straight weeks. Bitcoin was, I believe, above 99,000 at one point. We're very near that level. We're up 40% just this month alone. Gold set for its best week since April. And yeah, Bitcoin is what? 100,000 and 2 trillion, I think, on market cap are the next sort of milestones here for Bitcoin itself. Let's bring in Mark Cranfield to help us wrap our heads around the big themes this week. He's with us out of Singapore. Mark, why don't we start with Japan? How do we need to be thinking about the BOJ or the markets more broadly following the core CPI print earlier on?
Well, everything is falling into place for the Bank of Japan to raise interest rates again, but that's not the first time that we've seen it, and they've deferred on doing so as they did in October. But it certainly was interesting. The comments from Bank of Japan Governor Ueda yesterday suggested that there is going to be a hot discussion at the December meeting. He doesn't want to predict the outcome, which means that he probably is trying to persuade other people in the BOJ to come on board and to go for the hike in December rather than deferring it to next year. Now, what traders are looking for here is they've heard some of these comments before. There's nothing new in that. And if you look at where dollar yen is trading, it's still above 154. We recently got close to 157. So not a huge change in that respect. You can see they're not putting a lot of money on the table expecting the Bank of Japan to do something yet. What they're waiting for really is some kind of hints from the Japanese media. So if you think back to the way things have worked this year, both for the March meeting and for the July, when they increased rates both times, it was only a couple of days before the meeting when it became clear from commentary in the Japanese media that the Bank of Japan was shifting in that direction. And that was the turning point from traders' point of view that, yes, this is going to be serious. There is a live meeting, and they really are going to do something with the interest rates. We haven't seen that yet. There's still time. I mean, it's almost a month to go until the BOJ meets. So you could see some more comments from other BOJ members. But really, from a trader's point of view, they want to know that it has filtered through to enough people on the voting members of the BOJ to push it over the line. It doesn't look as though there's a consensus yet. In the meantime, you probably will find traders will be reluctant to build more short yen. The market seems to be short of the yen already. They probably won't build on that too much. The yen will probably be more influenced by what happens with treasury yields. If they do go up, dollar yen can go a bit higher. If they decline, dollar yen will go lower. But it's a waiting game now to see how serious is the rest of it. Mr. Ueda himself seems to want to hike, but can he persuade the rest of the members to cross the line when it comes to December?
What about the PBOC, Mark? Because we're continuing to see these fixings coming through really quite a ways off what the estimate is. FX traders, are they likely to sort of change their perception around the currency?
No, I think it's pretty clear that they're mostly using the offshore yuan to speculate against the currency there. You can see there's a bit of a gap developing between the rates on the onshore and the offshore. That will probably get even wider as we get closer to the inauguration of President Trump. The PBOC before, though it looks pretty big, 555 pips today was the difference between the estimate and the fixing. But we've seen before, it can go beyond 1,000. We've seen the PBOC get very, very aggressive. Just last year, we had a few times when they fixed more than 1,000 points difference between where the estimate was and the actual fixing itself. We're nowhere near that yet. And that partly depends on where the spot rate goes. If the spot rate goes above 7.3, you can bet the PBOC will be even more aggressive in trying to push the market back. But so much of it is outside their control. The offshore yuan is now a freely traded market. They do intervene, of course, subtly from time to time, and they ask their agent banks to intervene as well. But really, when you think about the context of it trades all hours of the day, just like other major currencies. The US dollar is very strong against almost everything. So the offshore yuan really is getting pushed around by the factors related to US rates, US policy, and on top of that, the risk that there could be greater tariffs on China next year. So when you put all that together, what the PBOC really is doing there, they're just slowing down the process. They don't want it to get out of hand. They don't want the market to get too one-sided. And we will probably see over the next few weeks that gap will get wider and wider. And we may well have to get back to the PBOC pushing the daily fixing 1,000 basis points below where the estimates come in.
Mark, we're done with earnings season. We're moving up against the Feds. As you've pointed out several times this week, markets have brushed off concerns over geopolitics. You know, the bar for markets to shiver at least risk seems to be quite high at the moment. Mark, the question I have for you is very simple. Are we set up for a Santa Claus rally?
I think it's going to be pretty hard to shift the convictions that people have, particularly related to the US market. Investors seem to be pretty confident in being long US stocks, short of US bonds and long of the US dollar. Those seem to be pretty core thing, and also long crypto as well, of course. It's going to be pretty hard to shake their confidence in those key assets that they're holding there. Those are the views that they have. They've had plenty of reason to change their mind. They haven't done so. They seem to be confident that Mr. Trump is going to get quite a few of his appointees through that will keep the policy going in the direction they're expecting. It would need to be a pretty substantial external event to shock people into thinking they've got the wrong idea. And even the Federal Reserve is falling into line as well. It's quite possible they will lower interest rates in December, but then signal there's a pause for the beginning of next year. There's not too much to derail people thinking, at least between now and year end. You probably get a continuation of what you've been seeing.
That was our Bloomberg MLive strategist, Mark Cranfield, there in Singapore. And of course, yeah, maybe we're good until January, but then the next thing comes up, and that's Trump coming back into the White House. And what exactly does that mean in terms of the relationship with China? And we know that policymakers have sort of signaled maybe they've got a couple of cards up their sleeves for how they plan to manage tariffs, but that's actually what we're just hearing from the Vice Commerce Minister, Wang at the moment. That's not him, actually. Maybe there he is. But essentially saying that foreign trade has maintained good momentum overall. So just some of the headlines that's coming out of that briefing so far over in Beijing.
Yeah, we'll keep you guys updated on anything else we hear from this. It's worth pointing out that this one just started a couple of minutes back, so might have a little bit more runway going into the second hour here of the China show. All right, ahead of that, mixed earnings. Well, mixed earnings season so far. When you look at cars and car makers and EVs, we'll unpack really who the big winners have been going into next year. HSBC joins us to talk us through their calls on the auto sector just ahead. This is Bloomberg.
Well, shares of Baidu have fallen pretty significantly so far this morning. We actually had a drop of as much as 10%. We're trading around 8% to the downside now, but it's reported its biggest sales drop going back to 2022. Let's get more with our China correspondent, Min Lo. And Min, I mean, we had sort of the lead-in from what we saw on Wall Street overnight, so this sort of reaction isn't so surprising, but it certainly would be, of course, a bit of a concern given what it tells us around how investors are thinking about the outlook for the company.
Yeah, and I guess the biggest drag here is the advertising revenue, because that is the high margin business for the company, and that had fallen by 6%, and it's really affected by this broader economic downturn because its advertising clients ranges from the real estate sector to the automotive sector, for example, but it's also that AI tool, that whole business as well that is struggling to monetize because you have the Ernie chatbot. It is the first to launch in the market, but it's now losing traction to the likes of ByteDance's Doubao, which is now the more popular app out there, and its core business as well is facing pressure from the likes of Xiaohongshu, Douyin, for example. These are video apps, but they are also functioning as a sort of user-generated content search engine as well that is cannibalizing on Baidu's businesses. And at the same time, you have this price war going on around the AI infrastructure providers trying to, get more developers and more startups to sign up as clients. So a very challenging environment overall for Baidu.
Min, thank you so much. Min Lo there on the latest on Baidu. That takes us really into the broader earnings conversation here. So, a lot of the automakers have reported earnings. So we'll start things off with NIO, I think, which reported either Wednesday or Thursday. So a wider than expected loss. Revenue actually fell short of expectations. This price war really started by Tesla last year, forced NIO, which held out actually, to eventually slash prices of its EVs. Now, XPeng also in the red, though. It actually lost less money than expected, so it narrowed that loss going into this specific quarter. Investors were also, punished the stock as the company reported rising sales of low-cost models, bringing down the average selling prices and, again, underscoring concerns over future margins. Now, doing better than XPeng and NIO was Geely, which said profits increased more than 90% in the third quarter. Now, revenue was up 20%, driven by strong sales of both EVs and also hybrids. Now, the newcomer, Xiaomi, previously known for gadgets and white goods, coming out, of course, with their lineup here. EV sales propping up quarterly results. Sales rose close to a third, while its auto business accounting for more than 10%. How quickly that ramped up, 10% of total.
Yeah, let's bring in Yuqian Ding, head of China Autos Research at HSBC Qianhai Securities, joining us this morning from Beijing. And I want to get started with sort of a bigger picture question, given we are at the end of the earnings season now. But what do you think in this sort of current environment is the recipe for success in the China EV space?
Well, that's a great question. So a couple of major debate onto this topic. First of all, we are in middle of the consolidation. So the pricing pressure has been part of life now. So the companies with scale, with increasing scale, as you mentioned, like Geely, they are incumbent company moving towards higher electrification. With higher scale, they can continue to improve the profitability despite of the pricing pressure. And the other means to stand out is the product cycle. And also, the XPeng has been mentioned earlier. This company is embracing a much stronger product cycle in the coming 5 quarters. They got another 4 new models coming next year. So usually the new model will help to restore the pricing and also enhance the economic scale during the process. And on top of that, I would say the EV competition, when we roll into the second half of the game, is mainly driven by the autonomous driving. While EV is increasingly commoditized in China, 1 out of the 2 new cars sold in China is now EV. Making a quality EV is basically a must to get into the market, and many players can do that. But the younger generation consumers are gradually looking more software experience, more cutting-edge technology, and autonomous driving among them will be the key differentiator. So along with the third quarter earnings, many of the OEMs actually on the earnings call not just talk about the earnings, but also talking about the exciting autonomous driving service they have been rolled over on the countrywide. And some of them talked about moving from door-to-door autonomous driving experience to the parking lot to parking lot. So a lot of exciting changes also happen on the software side that could be a potential game changer for the potential winners in the EV competition. And another highlight is the PHEV. So one of the key third quarter earnings take is that increasing more company has been talking about they're going to roll into plug-in hybrid production line next year, taking XPeng for example. And BYD also talked about, based on the 5th generation plug-in hybrid platform they've launched the middle of the year, there is more refresh based on this platform to come next year. And interesting data point to support that, PHEV booked more than 90% of the year-on-year monthly growth in October, while pure battery electric is 30%. So among the EV, PHEV obviously the growth sweet spot.
I want to pick up on that point you made around the autonomous driving software, because it's incredible when you think about how crowded the space is for the actual vehicles. We're also seeing that intense rivalry being replicated in this space as well. We've got Pony AI that's nearing its US IPO. Momenta is another that's looking to list. WeRide has just debuted. How is this offering going to expand, do you think, or evolve? Do you continue to partner with EV players, or do EV players as well go alone on that effort?
Yeah, that's an interesting question about autonomous driving. Let's say the business model about autonomous driving has been divided into two camps. So first is the part we talked earlier, the smart EV, the car makers who are making the smart EV product equipped with these autonomous driving functions. And the other camp is the robotaxi operator. So let's consider they're not selling cars, they're selling the robotaxi mile service to the consumers. So the business model is profoundly different. It's a technology operator. So they are the total addressable market is also different. For the smart EV, the total addressable market is the new car sales market per annum. But for robotaxi business, it's onto the city, the certain operation cities mobility service market. For example, the car hailing revenue pool per annum on a recurring basis. So first of all, we want to stress there is a profound business model difference, and also in terms of the product design, it's also different. So smart EV, they want to lower the hardware and software costs so that they can lower the pricing point to touch more consumers. That's the trend we've noticed among the smart EVs. But first of all, they introduced these autonomous driving functions in the high end, and then now they're talking about to put this function into the mass market to increase the adoption. The robotaxi, however, their business model is basically rolling over the cities. So similar as US, as Waymo operation in US, they've been expanding from city to cities in China. We've noticed Baidu's Apollo has been launched a successful robotaxi service in Wuhan city. So the business model for the robotaxi is technology, and generation by generation, the robotaxi BOM costs become cheaper because the technology, the hardware technology have increasing scale, and they originally they rewire the existing car, but now they can order the customized car from the OEM. But it's a profoundly different operation business. Yeah.
Yeah, well, I just realized it's actually good for introverts like myself, getting into a car with no other person that you need to chat up with. Yuqian, quick question for you. How are sales tracking this quarter overall across the sector?
Yeah, so I would say the sales data print has been very strong in October. We would say the high season this year, September, October, has been supported by low base, double down trading subsidy, and also increasing model supply. So we really have a very good data point. In the coming 2 months, in November and December, the sales momentum has been very strong. Some of our OEM companies, such as BYD, still talked about their supply is still trying to catch up with the order book. So the coming 2 months is likely to remain strong. But rolling forward, we would want to highlight quarter-on-quarter perspective, first quarter 25 versus fourth quarter 24, we might see the quarter-on-quarter trend to come down. So usually it's a typical lower seasonality, and also the wild card here is whether or not the trading subsidy going to be extended or not. There's Ministry of Commerce talked about they're working on potential proposal of extension, but again, whether or not to extend might not change or reverse the quarter-on-quarter decline direction, but change the magnitude of the slope.
A final question for you. Your top auto pick going into next year?
I would say in the near term, while we're seeing the first quarter 25 become marginally more challenging than the strong fourth quarter 24, with a bit of uncertainty coming from the policy side, among the OEMs, we would stay, we would be prefer the OEMs with a strong earnings and a strong product cycle, as well as supported with a strong PHEV product lineup, such as BYD and Geely. Relatively, they are more stable in a volatile market than the smaller cap.
Okay, those are the two. Thank you so much for the time. Yuqian Deng, head of China Autos Research, joining us out of Beijing there at HSBC Qianhai Securities. Plenty more ahead. This is Bloomberg.
Wow, some pretty good gains across the infrastructure space this morning in mainland China. We've got this policy effort now to try and boost national data infrastructure construction. And so these are possibly some of the beneficiaries out of that. It has been sort of that push we're really seeing across a lot of different governments, different countries to try and upgrade their service offering in this area. And it kind of comes back to that idea around sovereignty as well. But something we can actually speak with Kingsoft perhaps next week because we've got an interview with the CFO.
Yeah, well, stay tuned for that. And certainly that is one stock that's really done exceptionally well this week, despite the pullback we're seeing today. 2 straight days, I think, of north of 15% gains on a daily basis. Next board, please, if we can. So you're looking at some of these biotech stocks also in focus after China's also, again, a policy pivot here and a policy push to bolster gene therapy research. There we go. Playing out in some, not all. In fact, we're seeing a pullback of Wuxi Aptech, which might be down to more an idiosyncratic stock story more than anything else. We'll take straight back now to Beijing, where this joint briefing is still taking place between the Foreign Ministry, you have the Commerce Ministry, among others, and I believe on your screens right now is the Foreign Ministry official speaking there. A couple of things so far that they have. That foreign trade has maintained good momentum so far, that growth has slowed a bit since August, and that small firms are still facing challenges in the trade business. So, yeah, we'll keep you guys updated. The economy is showing more resilience and has great potential. That line just crossing the Bloomberg terminal. Plenty more ahead. This is Bloomberg. Welcome back. You're watching the China Show. Straight back to Beijing, where this joint briefing is still taking place. And they just actually, I believe, I'm not mistaken, just took a question on, I believe, potential tariffs, because the answer certainly seems to be along those lines, that China is capable of withstanding the external impact. They're also underscoring the healthy relations between the two countries will benefit both sides, and also China is willing to work with the U.S. on the principle of respect. So in many ways, these sort of lines are being drawn along certain levels, the closer we get, of course, to Donald Trump taking office late January. So far, that's what we have. And, yeah, we'll keep you guys updated. In any case, of course, if we do hear more from this joint briefing taking place in Beijing. Okay, from one big story to another, and it's day 2 of the Adani story. And if you took a look at the price moves yesterday, nearly $30 billion in market value wiped out. Unprecedented, of course, their bribery charges there from U.S. prosecutors, wiping out, at least from the wealth of the man himself, $15 billion. Our conglomerates media and telco reporter PR Sanjay joins us from Mumbai right now to talk through this. Sanjay, so we're entering day 2. Get us up to speed. What's the latest and what does today look like?
I think now this is going to get a lot more leverage in political landscape. The leader of opposition, Rahul Gandhi, has demanded an immediate arrest of Adani Group chairman Gautam Adani, and we are expecting that this will get more legs, more opposition parties will now demand for that, and we could see that a lot more actions from the key states also. They would also do that because for them there's a key weapon for them, and that is on the political side. And when we spoke to Adani representatives as well, they're not giving a clear-cut answer on like whether they were aware about these U.S. investigations to be specific, but they have issued a detailed statement saying that they are complying to all laws and they will seek a recourse, and they're denying and they're saying that there's no truth at all. And we spoke to certain sources from Adani's also. They're clearly telling there is zero transaction and this is not one contract particular to their company. And they clearly, they were very clear or that they reiterated about it. There's no companies, no listed companies, including Adani Green Energy or Adani Energy Solutions. There's no direct correlation to that. So the listed companies are safe, or they're ring fenced, and of course for the allegation which is against the chairman and his nephew and other team, they will be seeking a recourse, and they will be taking next course of action. And they've activated the U.S. office also. They're seeking legal advice from the U.S. team as well. They're exploring multiple options to sort out the new crisis which has emerged after Hindenburg.
What about the Modi government, though? Because I think sort of in one sense that sort of response from the opposition would be anticipated. The Modi government, given that friendship between Narendra Modi and Gautam Adani, has stayed silent basically on the issue. Is that something that they can continue to do?
That's a great question. I think this is so relevant because the parliamentary session is round the corner. So opposition parties and all key stakeholders are going to raise this issue, and this will raise more questions because the Indian capital market regulator will be forced to look into this case like in more vigilantly, and they will be forced to do. They may have to convince the investors and other stakeholders about this ongoing investigation. They will have to expedite the pending investigation against Adani, and we are not expecting Modi who will be replying to these kind of things. And Gautam Adani himself said he is not close to Prime Minister, and he has got land or whatever assets is from previous government, not the government which is run by BJP, which is led by Narendra Modi. So coming days will be very crucial in political landscape. Meanwhile, they have scrapped the bond issues of 600 million, and many other fundraising projects will be put on hold on a business perspective for Adani Group.
Yeah, certainly a friendship that both sides seem to like to play down. But that's Bloomberg's PR Sanjay there in Mumbai. And you can read more about the indictment of Gautam Adani and what it could mean for US-India relations as well, given they're already kind of precarious, a delicate relationship. That's the subject of today's Big Take, available to subscribers on the terminal or online at Bloomberg.com. We'll have more ahead date. But first, some corporate stories that we're tracking.
Yeah, this listing, the Pony AI IPO in the US, we have an update here, at least based on our reporting, that Uber might actually be part of that cash call here. Uber said to be planning to invest in that US IPO of Pony AI. Now, sources say it's seeking to buy more than $10 million of shares here as it considers using Pony AI tech in a partnership outside the US. Now, documents obtained by Bloomberg show that Pony AI share offering could raise as much as $260 million. Now, Chinese online brokerage Futu is reducing its headcount by about 5%. The Tencent-backed company says it's recently made adjustments to its org structure, including adding new roles and cutting existing positions. Now, Futu has added staff over the past few years, even as Chinese authorities lashed out at online brokers back in 2021. Apple is said to be developing a more conversational version of its Siri digital assistant. Now, sources say it's looking to catch up with OpenAI's ChatGPT and other voice services. Now, we're told that Siri will use more advanced large language models to allow for back and forth conversations.
Big focus still really on this tariff plan that Trump has for the US economy, and it's obviously the subject of that Chinese commerce briefing just happening this hour. But some are getting a little bit wary about it. Ken Griffin is one of those. We've also spoken to the BNY CEO Robin Vince, who says he's still got really high hopes for the US economy, even with those planned protectionist policies from President-elect Donald Trump. He spoke exclusively with Bloomberg about how banks are preparing for Trump's second term.
It's hard to predict the future, and so US exceptionalism has been a theme, and there's every reason to think that that theme could well continue. And President Trump said that he wants to continue to be able to power the US economy. Now, the whole process of trade is obviously a very controversial topic at the moment, but at the end of the day, what I think is reasonable is a good U.S. economy is a good thing for the rest of the world and is obviously a good thing for the United States.
The banks cheered right after Trump won the election. I'm just wondering, now that the dust has settled, how do you assess how the banks will do under the Trump administration?
Well, banks, particularly BNY, as we think about what we do in the world, we are inextricably linked with capital markets. As economies grow, as transaction volumes grow, as people want to borrow more money, they want to invest, they want to build infrastructure, all of those things are good for capital markets, and they're good for us as a really significant global capital markets bank. We are the largest at several things in capital markets. We provide critical infrastructure to capital markets to help other companies build their businesses. And so when economies perform and capital markets grow, it's good for the population, and it's also good for us and the other larger banks.
Trump is pro cryptocurrencies. Trump is pro digital assets. You are invested in that space. How do you see that space progressing from here? I mean, we're already seeing Bitcoin surging to about $100,000 at this point in time.
I tell you what we are, which is pro innovation and pro new developments, new technologies, things that are going to help to propel capital markets forward. So we're significant investors in AI, which we think is going to be very important, in real-time payments. We've done real-time payment things here in the region. We also care about the future of technology, including digital assets, distributed ledger technology, blockchain. We think those things could be interesting for capital markets. Now, Bitcoin and Ethereum are part of that, the actual cryptos, but it's actually the broader application of the technology to reinvent how the financial system works. That's very interesting. We're America's oldest bank, as you said earlier on, and so we've seen all of these technology innovations over the course of time. So being part of that innovation, that is important to us.
So you're intending to invest more?
We are investing in technology to be able to help our clients, and that includes digital asset technology. We provide custody capabilities for that. We also provide issuance services for that. And so our traditional businesses that we do for public markets, that we do for private markets, we also can do for tokenized markets.
And that was Robin Vince, BNY CEO, speaking exclusively with our colleague, of course, and Insight anchor, Haslinda Ahmed. Just ahead, it's Friday. We'll get the latest buzz, and we're talking wine. Why not? This is Bloomberg. Welcome back. You're watching The China Show. You're just in time. It's Friday. A couple of more hours, at least for Belle and myself. 90 minutes. We're out of here. Time for some drinks. Afternoon drinks. Talking coffee and water here. Luxury consumer sentiment in the region, especially when we look at the wine sector. 67 Pall Mall is a private members club for wine lovers. It started in London almost 10 years ago. It's also in Singapore, of course. For many of our friends and colleagues in that part of the world, it's brought its membership program to Hong Kong earlier this year. Let's bring in the man behind the club. You might also recognize him from his former life as a former credit trader. Grant Ashton is here with us on set, founder and CEO.
That was a long time ago.
It's a long time ago. Do you miss looking at spreads? I'm curious. They're quite tight right now, given where the Fed is and treasuries are.
Yeah, absolutely. No, I ran credit trading in Barclays and Salomon and UBS, all sorts of places like that. But that was a long time. It was a former life.
Yeah, well, clearly this is a better option, and certainly you've upgraded. So you started out in, correct me if I'm wrong, London, and then you brought it to Singapore. I've heard good things about the Singapore club. Switzerland?
Yeah, the one in Verbier was actually the second club. We were there. Singapore was the first big club we built overseas. We're in the process of opening in Melbourne. We have broken ground there, finally. And we're opening and broken ground in Bordeaux. And we're just about to start in Burgundy. So we've got three in the works, and obviously a lot of other sites we're looking at, mainly in Asia.
And we caught you at a good time being in here in Hong Kong. So if you could help us understand, so you guys established a presence here in Hong Kong, which is somewhat different, of course, to the big club that you have in Singapore. Just help us understand what your plans are for Hong Kong.
Yeah, here we have a very small wine bar, which is up on Hollywood Road here in Hong Kong, which at the moment is very focused. So basically, that's just a Pinot Noir only club. So if you, that's all it is right now. And actually, in 3 months' time, it's actually going to become Chinese wine only. So very, very fitting the China show, because that's going to be only Chinese wine starting in January. So
that's an interesting proposition, because the mainland wine market is not super well known. And if you go to a wine tasting, for instance, you usually have a heavy contingent from France, Italy, maybe a little bit more from the New World. China maybe is 1 or 2 bottles.
Yeah, no, we did a walk-around tasting in Shanghai about 2 weeks ago now. We had wines from Victoria. So we actually did Australian wines of Victoria, and we invited a lot of Chinese producers to come. I think we had about 60 producers all in, and about 420 people turned up. So there was strong interest. And I just came back from Shandong. I was there for 3-4 days, taking some members up to visit the wineries up there, and that sector is getting much, much stronger.
So you pay sort of a subscription fee or a membership fee. That's around $1,900 US per year, and then that gives you access to different tastings, for instance, or different talks. What does your membership base look like, and how is that evolving?
Oh, I mean, look, we have about 10,000 members in the world, and it's split between physical clubs like Singapore or London or where it's actually slightly more than that. That'd be about $3,000 US for a physical club in a physical city. But somewhere here in Hong Kong, or we've just opened an office in Shanghai, for example, or other areas we're looking to go into, Bangkok, we would have a virtual club. So essentially here in Hong Kong, you would join 67 Pall Mall Hong Kong. We'd do events every week. You also get access to the whole group. So you basically will get access to all 7 clubs when they're open. And in the next few years, look, there's going to be another 5 or 6, I'd have thought, in the next kind of 5-6 years. So we're certainly looking to expand the footprint. So for your $1,900 US, you get access to all those other clubs. If you're in Hong Kong here, because we don't, our site here is tiny. It's very much a toe in the water here.
So you mentioned 5 to 6 new locations. Oz this next year. What other cities are you looking at possibly, or have you made more concrete plans across the region now?
We're working very hard in Shanghai, as I said. We just opened an office there. Okay. So
is a club coming in Shanghai?
Maybe.
We'll see.
Maybe. Okay. We'll see. We'll see. Working on it. Bangkok, we're working on something there. Korea, we're working on something in Seoul at the moment. And I'd love to do Tokyo if I could find the right property. And Tokyo, just hard to find a big enough space at the right price.
Yeah, and just very quickly, how do you determine what kind of presence you'll have in a certain place, for example? A big club in Singapore, you have a different format here in Hong Kong. So help us understand what goes through that decision.
They're all very local clubs. So, the Singapore club is very much kind of Peranakan heritage, very much a Singaporean club. If we do something in Hong Kong, a physical presence here, which we're looking at as well, it'd be very much a Hong Kong Chinese club. So we're not a British club that you kind of plonk into the middle of Central. It's very much, if we're in Tokyo, it will be a Japanese club. Now, wine is at the core of it. We have typically the largest wine list in any city we're in. We typically have about 1,000 wines by the glass. So you can come wandering in and you say, right, I want to try 5 different Pinots from 5 different continents. You can do that. So that's very much a core of what we do, is very, very large lists. 40, 45 different countries on the list. So very much, very, very wide. And that's probably at the core of what we do, is that kind of wine by the glass. Because people like to explore, so they get the opportunity to do that.
Well, yeah. Well, thank you so much for taking the time and to speak with us. And let's talk again soon once you have more plans, of course, for the region. Maybe Shanghai. We'll
Absolutely.
See. Maybe Shanghai. Perfect for the China show. Grant Ashton there, founder and CEO at 67 Pall Mall. By the way, for our Bloomberg clients, if you're looking for more wine collecting tips, the terminal actually has you covered. In today's edition, in fact, the timing could not be better, of today's Top Shelf. We have an exclusive interview with a billionaire on bottles you should start cellaring. Yep, that's a verb. Right now. That's available on the terminal and also on the website on Bloomberg.com. Plenty more ahead. Happy Friday. This is Bloomberg.
Taking you back to this briefing, we're tracking this hour from Beijing, hearing from the Vice Commerce Minister, officials from the Ministry of Foreign Affairs, Ministry of Industry and Information Technology, the General Administration of Customs. So really just a cohort here of officials talking about how China can withstand the risk of 60% tariffs being imposed by the incoming Trump administration. We have heard from the Vice Commerce Minister, Wang, saying that a healthy trade relationship between the US and China can benefit both sides. And we're also hearing as well about this plan to issue policies to try and expand green trade. So it sort of adds to that infrastructure or policy push we're seeing around a number of areas, green trade, infrastructure, and then also biotech earlier as well.
Yeah. Anyway.
Back to the newly listed Japanese subway operator, Tokyo Metro. This is a different area, but says it's looking for ways to expand its business beyond railways. We heard from the CEO, who told us exclusively how they plan to allocate part of their capex to growth opportunities, and particularly in real estate.
10月23日に IPO をしまして
Since our IPO, we've been watching the stock price every day, and that has been encouraging. Although our focus is on railroads, we are determined to take on the challenge of growing our business in a variety of fields.
You have a lot of foreign visitors right now because of a cheaper yen. How much does that help your business?
Income from inbound foreign visitors is about 1.5% of the total revenue of all types of tickets. We have about 3 million inbound visitors every month, so we expect about 35 million throughout this year. That means that we have already exceeded the 30 million level we had before the pandemic.
When it comes to non-transportation revenue, your peers like Cebu or Tobu, they have retail, they have department stores, they have real estate. How much opportunity do you see in those sectors for your business?
I think it is clear that the railroad is the mainstay of our business operation at this time. In the future, we would like to expand into fields other than the railroad business. These include real estate, distribution, advertising, new business, and overseas business. We would like to strengthen these areas. We will invest about 30% of our annual capital expenditure of approximately 100 billion yen in growth investments. We will spend most of that 30% on acquiring new real estate properties. And one of the models we're thinking of is selling the properties to REITs and using the profits from the sales and the growth investments to purchase larger properties to expand our real estate business.
You just got awarded an operator contract for London's Elizabeth line. How much opportunity are you seeing overseas?
そうですね。これまで、技術コンサルティングとかですね。
Yes, we have been engaged in technical consulting and education and training projects. We have been exploring the possibility of using our expertise in construction and in operations and maintenance to contribute to overseas cities. We have received an offer from the Elizabeth line in London for the O&M project. My staff and I are excited to contribute to the development of railroads in London and the rest of the UK by using our knowledge and experience on this new line from the way we service and operate our own stations.
Activist investors are very dynamic right now here in Japan. Are you concerned about this sort of activism as a newly public company?
The Tokyo Stock Exchange also recommends that we strive to manage our business with an awareness of the cost of capital and the stock price. So we would like to use our listing as an opportunity to manage our company with an awareness of capital efficiency and to invest in growth. In this way, we will continue to engage in dialogue with our various shareholders and become a company that is chosen, selected, and supported by them.
There we go. That was the Tokyo Metro CEO Akiyoshi Yamamura speaking exclusively with, in case you didn't know, that was Sherry. Okay. We're looking at shares of Baidu. I think we're off slightly lows today. We're still down 7%, though. At these levels, we're back to levels of about, 24 months ago. Soft set of earnings, I think, is a good way to put this. We'll see what happens here. Citi out and downgraded their call into stock a little bit as far as the price target goes. E-commerce stocks very, very quickly out, and we are seeing the government's promises to boost trade, and as you can see, it's playing out across some of these names here.
in the region. Very quickly, global macro movers as we wrap up this week, where really there has really been just one macro story in town over the last 2 months, and that's the stronger dollar. And we are on track for an 8th week of strength in the US dollar, Bill.
Yes, and it has really been sort of a drag on Asian equities in combining it with the moves that we've seen in treasury yields. But today, actually, we're seeing some upside coming through, and that also tells you maybe it's that sort of flow on from the Wall Street session, and that was sort of ending off the NVIDIA earnings as well, because we saw maybe a changing appreciation around the good signs that came through in those figures. But that's it. Happy Friday to all.
Yep. Say hi to our producers. Where's Ernest? Happy Friday.